Okay, so we got some big news for Broki. We are now calculating the penalty amounts on your mortgage files. Now, full disclosure, these are estimated penalties. We do have previous rate data for posted rates of major banks and other lenders that would use a posted rate IRD structure. However, we don't necessarily know when that client had a rate hold from and what the discount was during that rate hold, but we can accurately estimate what their discount was on their file based on their closing date and the lender that they're at. Okay. But aside from that, variable, adjustable, only ever 3 months interest. We all know that. But this portfolio tab is going to let you scroll all the way to the side. You can see the lender that they're with. You can see their original balance. Their current balance has actually been tracked all the way down. So you'll notice that there are different pay downs because we're tracking that pay down schedule. And in the mortgage file itself, you can actually log when they made lump sum payments, and it will completely adjust that current balance too to account for the extra interest savings that they might have made. So really cool there how you can actually track your clients' mortgages. Got their interest rate, got their term. We also got like their years remaining, and that would be like their estimated amortization. So if they are at a variable and like rates have been dropping, that estimated amortization would actually go down faster. Months remaining in the term, and if you scroll all the way to the side over here, you'll start to see the penalty amounts. So as you can see, these ones are 3 months interest. If there was an IRD calculation, it would show IRD. It's going to show you the penalty amount. This file I don't have any rate data in for, and that's why it's showing 0. But it's going to show you the penalty amount, the break-even rate, which is the rate that you would need to get this client in order to save them money. Okay, so essentially a 4.61% rate is going to save them $8,420 over the next over the next 24 months. Okay, because 24 months times 351 is going to equal that 8,420. In order to save 351, they need a rate of 4.61. So that's one that we can beat. I can go and I can get them a new mortgage right now, and it's even going to tell me how much I could save them based on today's rates. Now, to input today's rates, because we all know we can get different deals, or maybe you're potentially planning to put them in a variable, all you have to do is go configure obtainable rates, add in your conventional rate, your insurable rate, and your insured rate, and it will filter every single file you have to then apply that rate to it and then calculate the net savings. Now, best case scenario, average scenario, and worst case scenario, I want to explain those quickly. So we have posted rate data back till 2021. So anything that's a 5-year term, which is pretty much the highest. I know there's some 7 years, but anything after 7 years is 3 months interest anyways, or anything after 5 years is 3 months interest anyways. But we have posted rate data for most of the major banks all the way back till 2021. And with that being said, we can very, very accurately assess what the penalty is going to be on a mortgage, but it's not guaranteed because that person could have had a rate hold that would have caused a different discount and so on. So with that being said, we wanted to add in a range. We wanted to give you guys an idea of if this is a good client to look into more. The whole purpose of this is to identify opportunities. It's not for you to just take this number and go and tell your clients, this is your exact penalty and we can save you this exact amount. This is a conversation opener of, hey, it seems like based on what I've been tracking, we can save you some money. Seems like I should be able to save you about $3,500, but in order to know for sure, you might want to go request an exact penalty from your bank because it seems like we can make this happen right now. So it's a good door opener, and it's a good way to just filter through your entire database. There's no limit to how many files can be in here. It's all your completed files in your pipeline. So anything marked as completed would show up in here. Now, what I want to mention is, the average scenario is based on the posted rates that we actually have stored in our database. So that's based on the ones that we've actually collected, and we have, like I said, we have back till 2021. Best case and worst case, we wanted to add a little bit of a range to it. So we have ours, but then if you want to be a little bit more conservative, the worst case scenario would be 0.15 higher of a posted rate than the posted rate we actually have stored in our database. Best case scenario is 0.15 lower. So it gives you that range. And I'm not going to say that worst case scenario is a confirmation that that's absolutely the worst case scenario. The penalty could be higher, but it's unlikely that it is. So it's very important that you understand that this is not a tool to tell your clients exactly what their penalty is. It's for opening the door to do an assessment. So this is one of the biggest updates that we just did to Broki that goes alongside the mortgage tracking. And that's when you go into a mortgage file and you can basically track where it's at. So I'm going to go find my test file that's in application received. I have a bunch of dummy files just for these demo purposes. And you'll notice on this page, there's some more details. There's estimated amortization, estimated balance. So I want to show you where that comes from. So if you were to go edit details, you'll notice there's a lot more options in here now. So we got our different transaction types. As soon as you click reverse, it's going to basically zero out the amortization and the balance will actually start climbing over time. So you see how they started with 720. Now it's saying estimated balance 759. Well, we're already 2 years into this term, so that's how much it's climbed up over the time. We'll go back to purchase, and it puts it right back down to the pay on schedule. Now, the cool thing is if I switch from like variable to adjustable or whatever, it'll actually account for those differences in prime rate. So you can't switch this once it's closed. Once it's closed, it's closed. You have to unmark it as complete, then switch it or change the closing date to later, because we all know that you can go from adjustable to variable, but you can't go from fixed to variable and adjustable. So there's a reason why you can't switch it, but if you select variable, there's going to be a different pay down schedule than adjustable, because if rates go down, then you're paying your mortgage off faster. So it's actually taking that into consideration. Another thing that it's taking into consideration is if you do a lump sum. So if your client calls you and they say, hey, I want to do a lump sum payment, and you know when they made that payment, maybe they made it a couple months ago. As soon as you save that event, it's going to adjust the estimated balance, but it didn't adjust it just by 20K. It actually factored in the extra interest that they're going to be saving. And if you want to delete that, you can. Same with payment frequency changes. If you know they went from monthly to accelerated biweekly on a certain date, then it will factor that into the estimated pay down as well as the amortization left. So very, very cool feature for tracking all your clients' mortgages quite seamlessly, which is going to give you more accurate penalty data and just a better way to interact with your clients. So those are two big updates. And then I'm going to make a separate video for the other update, which is our deduplicate contact logic, where you can minimize the amount of duplicates you have and reduce the ones and merge them together. So that'll be in a separate video, but I hope this helps explain the portfolio as well as the new mortgage file tracking.